Malcolm, UNH, a stock you own, up 7.5% or so on a pretty well-received earnings report this morning. Now, it had been a pretty weak performer. What are you seeing in the numbers?
Yeah, Mike, I initially bought shares of UNH last month as a trade on that pullback where investors got skittish over United CFO's comments about rising costs in its Medicare Advantage business. And I thought that those fears were likely overblown. And I thought that given their scale and diversified services portfolio, UNH would certainly figure out how to pass those extended costs, increased costs on to their insurers rather than absorbing the majority of those costs themselves. And based on what they reported this morning, I'd say that expectation was correct. As a matter of fact, they reported a 6.2% operating margin for the last quarter, which is the exact same as it was a year ago. So I think this is definitely a name that's turning the corner. They're at least getting past those fears that kind of spook the entire health insurer market as a whole. So we can probably expect that the majority, if not all of those health insurers who all sold off in aggregate along with UNH are probably on the mend and going to see a rebound going into next week.
Yeah, it's a good point. I mean, Cigna, for example, is up 4.5% today on this number. You say you're thinking about holding UNH a little bit longer. Does it mean it doesn't yet qualify as a longer-term holding, that you're not confident in the overall long-term story?
I don't necessarily want to own healthcare long-term. I think that, they'll definitely continue to pass along increased costs, like I said, to their consumers in the form of higher premiums, but I do think that it'll catch up with them eventually. I think that, they reported weakness in that medical loss ratio, which was up about 2% year over year. That's the number that really matters for them, and I assume that's what caused them to become a little bit cautious in the first place. I think that's going to be overshadowed the remainder of this year by share repurchases, which will give them some time to get it sorted. So even though I expected to sell today following positive numbers for Q2, I'll end up sticking with this name a little longer and hang on to it. I like the increased guidance for the remainder of 2023, them lifting expectations by 20 cents for the full year in the face of those rising costs. But I'm not necessarily so sure that I'm keen on healthcare, over the next 2 years plus, as in this being a name that I want to hold on to all the way through that period. I'm not as confident in this as I am maybe in tech.
Just a real quick, is there anything in particular keeping you wary on healthcare as a whole?
Well, as I continue to read more and more of what came out from United Health, they started talking about places where they see those increased costs coming that they didn't necessarily anticipate, right? So the increased costs coming from seniors having more and more elective procedures was kind of obvious, but the increased costs related to things like mental health care, number of folks seeking out additional mental health services was something they didn't necessarily see until recently, and I think that trend could be negative for earnings.
Yep. Malcolm, thanks very much. Have a great weekend. As we head into the close, worth mentioning United Health, its gain is good for 200 upside points in the Dow because it is a price-weighted index. It is in the Dow. So without UNH's gain today, the Dow would have been down about 100. You see the S&P 500 sitting on a slim decline of 0.2% on the day, still up more than 2% for the week, sitting on that 4,500 level, still very close to a 15-month high. Russell 2000 and the NASDAQ, both strong for the week, but both the Russell downside leadership today as we go out for the week with the VIX below 14. That's going to do it for Closing Bell. Now let's send it over to Overtime with John Ford.